Hello there, Maverick traders. This is Rob. It is Tuesday, and look at that date, July 29th. That's a little bit depressing. For those of you that have kids going back to school, your summer is almost over. For those of us that either don't have kids or are empty nesters, we're just right in the middle of summer. Sorry to rub that in on you. In this session, we'll be going through the news of the day. We'll be talking about what's happening in the markets. Tomorrow's a big Fed meeting, so today there wasn't a whole lot going on.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
In the market today, we had the first down day we've had in a while. It wasn't a huge down day, but it was a down day nonetheless. So we've got the markets down about 1/3%. Here's the problem, is that they gapped up and there was just constant selling all day long. Not huge selling, but it was definitely constant. Oil popped up 4%, which definitely didn't help the situation. Gold basically flat after falling for about a week. If we take a look at the news, we had some earnings that weren't great. We had earnings from Boeing, not great. We had some earnings from UPS, not great. In the industrial sector, a lot of the things that had done really well were down about 10%. Now look, we are at an all-time high, and so at this point, things are very, very bullish. And I've said that this is where the crap, I've called it the crap, but really I'm talking about high volatility names, super, super speculative names. Like we've already had the Microsoft run and the NVIDIA's run, and then we had the second phase run. And then all of a sudden we have things that really have no business plan and they're running and it's like the meme craze all over again. That is where we are. And when those things start to underperform, it's kind of telling you that this little bit of a run is over. And that's the one thing that I don't want to project too much. But we've said here at Maverick, we have a saying about sentiment. When bad news comes out and the market goes up, it tells you it's going up. When good news comes out and the market goes up, it tells you it's going up. And that's what we've seen. We've seen bad news come out, the market goes up. Good news comes out, the market celebrates it. We are no longer celebrating the good news. Yesterday, we got the US-Europe trade deal with a lot of supposedly good things in it. The market was a red market. It was a down day yesterday. And today, we had more good news and it gapped up and it sold off. So when good news comes out and the market sells off, it's kind of signaling to you, hey, it's going down. I don't want to get too bearish. I don't want to make this a big thing, but here we are. We're at the end of a run. We've gone from 6,200 up to 6,400. That's about a 3% run. Okay, you know what? Let's say that we get a pullback to halfway. That's somewhere around 6,300. And that's right where resistance is. That's right where a 20-day moving average is. It would be a really reasonable point here to expect the market to pull back to at least 6,300. Now, when the market has gone up every single day, pretty much over the last 2 to 3 months, not months, but weeks, I know these down days seem painful and a pullback may seem painful as well. And if you have short-term options expiring this week, definitely going to be painful unless you do some management of those. But look, this is just where we are. We have topped out. We have a bearish engulfing candle. And look, we've gotten one up. Well, it wasn't engulfing. We've gotten ones here, and it's just kind of a signal like, okay, things are at least on pause for the bull market, if not a little bit of a pullback. I think we get a little bit of a pullback here, but nothing substantial. You can see here the heat map. There was some buying out there, but in the big names, there was some selling across the board. Meta down 2.5%, probably the biggest one for the day. So here we are. We're at a +3. We're overextended. Everything about this market is telling you it should pull back. But it's been saying that for the last 3 weeks. So you don't get overly bearish. Your bullish stuff that's really looking good, let it ride. stuff that you're looking to maybe take some profits on, go ahead and take profits on those. And then when we do get a pullback, it should be a much better opportunity to enter into some new trades. So I don't have a ton of trades for you because I don't love the setup here. I don't love the setup on the long side. I don't love the setup on the short side. So I've got one bull here for you. I went through this long list of bullish stocks. There's tons of bullishness out there. But I basically said, I don't want to go after the Palantirs. I don't want to go after the high flyers. I have no desire to try to catch these as they're falling. Let me go to the boring stuff. So my list here is mostly boring stuff. Western Digital, Dell Computer, Goldman Sachs, Win, not exciting stuff, and Dollar Tree. And you can see here Dollar Tree had a hammer candle. We've got this high and tight base. It came down today, but virtually closed where it opened. So the buyers came back into this one. I'm not saying I love this one to run up to 130. All I'm saying is I think this holds. For me, I think a 110, 115 makes a lot of sense. This is going to be, you're selling me at the money, you're buying the 110. You're probably going to pay about $3.50 for it. That means you got $1.50 of upside. If that's not your kind of trade you'd like to do, then just pass on this one. But this one is a theta trade for sure. And then on the short side, this one here looked interesting to me. This has been a really wild stock. This is Circle Internet Group. They're a crypto company, and you can see they came public back here at $80 a share. Now, that's where they came public. That's not even where they were priced. They were priced at $30. So this thing has gone from 30 all the way up to 300. And it came all the way down to 180, and then it worked its way back up. And now here we are back down here at the lows. Now this should be correlated to cryptocurrency, but over the last week or two, it has not been. It has been significantly weaker than what we've seen in the cryptocurrency market. So look, if cryptos go sideways, I think this thing works its way lower. If cryptos go down, I think this thing could have a big fall. So for any of you looking for a big swing off of a bearish trade here, I really like Circle Group. How big could you make this? 140? So 140, 180, bear put spread. I mean, that's pretty aggressive. Just long puts would be aggressive as well. I like this one, but again, we need to have that intense sell-off, and crypto falling would really help this come down to the 140 area. Other than that, I don't really love the setup here. And whenever I don't love the setup, I trade less, not more. Let's talk about tomorrow, because tomorrow we do have a Fed meeting. 2 p.m. Eastern Time, we'll get the statement. 2:30 p.m. Eastern Time, we get the press conference. Obviously, the market's going to be pretty steady and soft until that news comes out. So expect the first half of the day tomorrow to be probably a little weak because we do have some bad earnings after Bell. We've got Visa that's down around 5 or 6%. So we've got some more earnings that aren't coming in great. But take a look at what happens tomorrow. FOMC statement followed by earnings from Meta and Microsoft. Yeah, the next 2 days are going to be real exciting because we get Amazon on Thursday. Expect there to be a lot of volatility here. If that is the case, I don't think you want to be stepping in front of it at these really, really high levels. Because yes, if let's say the Fed comes out and makes the market happy and Meta and Microsoft come out and make the market happy, what's your upside? 2% max, 1% probably? What if the Fed disappoints and then Meta and Microsoft disappoint? We're talking 4 or 5%. I don't really love the risk reward here until these things are gone on the bullish side. And doing anything aggressively short is just counter trend trading and hoping that your trade works out. It may work out every now and then, but shorting a market this strong is usually going to end up in losses. So I like managing the things you have. Anything you wanted to take profits on, look to take some profits, take some half profits. Let's get through these FOMC statements and big earnings. And if we do get a pullback, let's be licking our chops for potential bullish entries into some of these really nice trades. So I'm on a little bit of a hold here, and we'll wait and see what happens. Goodbye, everyone.